Hey everybody, Gary with Basecamp Trading. Let's take a look at gold futures today. And you can see that during the London session, gold was actually working its way higher. Higher high, higher low, moved up to a higher high. But then in the US session, which was right in here, we left that big topping tail right there, showing a reluctance for gold to go any higher. Next bar set up the bull flag. It did not trigger. Actually ended up closing right down here at the bottom again. The next bar opened at the top, pushed right down to the 50 EMA. And as we know, the 50 EMA is very, very often significant support and resistance on these 30-minute charts, and you can see it here in the London session. You can see that it was resistance. We finally closed above it, and then it came down, stayed above it, popped under it, stayed above it again, popped under it, stayed above it again, touched it, stayed above it again, broke underneath it, stayed above it again, broke underneath it, closed above it yet again, and then finally closed below it. So we had some bearish price action going here. We left this topping tail. We had a topping tail with a bearish body. The entire body of that bar was all selling. This pushed down. Now, you did leave a little bottoming tail where we got this little bounce off the 50, and then we put in this big indecision bar. Pushed down, didn't stay down, pushed back up, and then we had a really bearish bar that finally closed under support. The bar opened at the top and then closed right down here and actually closed near its bottom. And that was a close under support. So as we know, broken support can become resistance. And that's what happened. This next bar opens right here, pushes up, makes a last kiss off the 50, not able to stay above it, turns support into resistance and triggers in the bear flag, and then gold starts to work its way lower. Pull down here to the 200 EMA. Again, we know the 200 EMA is often significant support and resistance. And this bar, you can't tell now because it ended up closing here, but it bounced off the 200 numerous times before it broke and continued to run. In the meantime, this bearish price action had caused the 5 and 13 to cross to the downside. Price ended up closing under the 50. Momentum, fast line had crossed the slow line to the downside, turning momentum bearish. And gold made a nice run to the downside. Got extended. You can see hit significantly undervalued 3 bars in a row. And then did what gold or all the commodities do when we hit significantly undervalued. We typically will get a pullback, we'll go into consolidation, or we will reverse. In this particular case, we just kind of pulled back and mostly just consolidated. We just kind of went sideways really pretty much the whole rest of the morning. But that's price action here gave us some nice opportunities on the short side and some really nice Renko setups. And here's our Renko chart. And this is where we left that topping tail, and then gold started working its way lower. We broke the cloud, slow line zero touch. At this point, the trend was changing to a downtrend because we had a lower high, broke to a lower low, so we had a trend reversal breakout out of the cloud, working its way down. We pulled back into the cloud. Again, you know, this is one of the setups we like. We break the cloud, pull back, get a wick out of the cloud, and we move down. Everything's in alignment. That push down, the initial zero touch push down would have been worth a potential couple $100 per contract. Your maximum was 300, but you probably didn't catch that. But you should have been able to lock in a couple $100 per contract. Same thing here, should have been able to lock into a couple of $100 per contract. And then we got the setup that we really like, and this is a slow line continuation trade. The slow line is indicating the slow line on MQ momentum. You can see that we had broke to the downside, pushed down a little, and then the slow line came back to the zero line. The zero line is a line that the histograms move above and below. Gave us a nice momentum reset, so we had plenty of room for momentum to accelerate our trade in the direction we wanted to go. And this cyan arrow right here is indicating this slow line zero touch. And again, we like this as a continuation trade because now we're in a downtrend, moving nicely. Everything's in alignment, smooth 50, prices under the smooth 50, price under the wicking out of the cloud, 50 SMA under the smooth 50, the 34 EMA under the 50 SMA, the 18 EMA under the 34 EMA, everything in alignment. Nice momentum reset, plenty of room for momentum to accelerate our trade in the direction we wanted to go. We had some targets down below, and if you trade with us, you know that we trade to targets all the time. And our initial target was down here at 1830.10. Our entry was 1840.7. Anything under that actually got filled at 1840.5. And we continued to push down. Target was 1830.10 first, so that our first contract's off at 1830.10. That's a nice 14-point drop, which is actually a little more than that, but that's a nice $1,400 per contract drop right there. Again, we had lower targets. We just trailed pivots. We worked our way down into the next target for another potential $500 per contract. And if you held onto your runner, actually trailing pivots came back and got stopped out right here. However, in the room this afternoon, we re-entered right here because we had this bag number down here. Bag number, stands for big, audacious goal. So our goal was 1822.40. We got a nice slow line zero touch out of the cloud, push down, hit our target. We're able to grab another potential $400 per contract. So some pretty decent opportunities in gold this morning. Again, just depends on how you're trading. You know, you had an opportunity to grab a couple $100 per contract here, opportunity to grab a couple $100 per contract here, opportunity to grab $1,400 per contract here, potentially another 500 here, and another 400 here. So lots of really nice opportunities available to the short side trading gold, and it all started with a last kiss off the moving averages on our 30-minute chart.